Welcome to March Business Outlook Survey Press Conference Call. My name is Catherine Dibling, Senior Media Representative with the Federal Reserve Bank of Philadelphia's Public Affairs Department. And with me today is Mike Trebling, Senior Economic Analyst in the Research Department, also at the bank. And today we will be talking about the March Business Outlook Survey, our manufacturing survey, and answering questions from reporter Stephen Joyce of BNA. First, Mike will give a brief summary, and then we will begin the questions. Mike?
Thanks, Kathy. Regional manufacturing executives responding to the Business Outlook Survey in March reported continued improvement in the sector. The survey's broadest indicators either improved from their readings in February or remained at relatively high levels. The index for current new orders showed notable improvement this month. Price increases for inputs remain widespread, and slightly more firms reported that prices of their own manufactured goods increased this month. The survey's broad indicators of future activity also showed noteworthy improvement. We also received responses to special questions this month that indicated that firms are generally expecting an acceleration in production growth for the upcoming second quarter.
Thank you, Mike. Stephen Joyce of BNA, do you have any questions?
I have three. The first is, if you compare this survey to the one that came out on the 15th here in the New York district, it's more consistent. The district of Philadelphia is more consistent in that there's most of the indices showed growth, where here in New York the top line was okay, but there were some underlying weaknesses. My first question is, do you see sort of a consistency in all of the indices that show improvement? And I'll just do my three questions right now. My second question is on the input prices. Are you concerned about inflation? And my third question is the inventories increased rather substantially, 600%. I'm wondering if you have any idea why that was. Thank you.
Sure. Right. I think the numbers, as I mentioned in the summary, are reflecting improvement either across the board or we're very close to the high levels in the previous survey. So I'd say, yeah, they are quite consistent. We've seen, a pickup in the share of firms reporting new orders for a couple months, with a substantial increase this month, for example, from 42% to 55% of firms reporting new order growth, and a consistency in the share of firms reporting improvement in activity in the activity index and shipments, the high levels prevailing over the previous month. So we do compare our numbers with New York, and they're continuing to suggest growth, but our levels have moved up a little bit higher than theirs in general this month. On the price front, we're still seeing a large share of firms reporting higher input prices, 64%, a little bit lower than last month, but which brought that prices paid index down a little bit, but it's still a fairly high reading. And on the prices received, what we're looking at carefully is the share of firms reporting that their own prices have increased. And we saw a little bit of a pickup, and every month, the last few months, we've seen a slightly larger share of firms reporting higher prices of their own manufactured goods. So some of those higher input prices that are being seen in all the other indexes, import prices and intermediate product prices in the other U.S. indexes, are being passed through in smaller increments, but still not a predominant number of firms. Less than a third of the firms in this case. The third question about inventories, the current inventory number has been positive, I believe, for three consecutive months now. I have no explanation for that. We don't see any comments in the forms that are completed for us, but it's consistent with, I guess, firms ramping up production and maybe maintaining higher inventories for expected new orders, which are obviously expanding in this month's survey as well. And it's also consistent with, I think, the special question that we had this month, where we asked firms about their expectation for production growth in the second quarter, the upcoming second quarter, compared to the first quarter. And in those responses, we saw, 75% of the firms expecting increases in production in the second quarter compared to the first, and a fairly large percentage, 65% of the firms, indicating that it would reflect an acceleration in growth from the first quarter. So we are seeing optimism with regard to production in the next 3 months, and in our regular survey, the 6-month outlook is much improved as well.
If I could follow up on that, so do you think manufacturing firms are starting to hire now, and that's why you're seeing more production and more inventory growth?
Sure. I mean, the hiring has picked up. We're seeing, a quarter of the firms this month reporting some hiring, and it's reflecting, I think, their expectation of expanding activity going forward. Sometimes that when they're finally hiring employees, that's indicative of improved expectations.
Okay. And I'm sure you did this on purpose. You avoided in your second answer the word inflation. I'm going to try one more time. Are you concerned about inflation since you see the input prices going up?
Well, we have seen. I mean, we keep track of each month of these price indexes, and look at the share of firms reporting increases. And of course, this is just a manufacturing survey and just a regional manufacturing survey. So we have seen these index levels as high as they are now, back just a few years ago, and when energy prices were being passed on. So they can come down as fast as they've gone up. And it's just one sector and a small sample of manufacturing firms with regard to their pricing. So whether it affects the general economy, it is just one sector, and we look at broader indexes of measure for general inflation than just these kind of indexes.
Thank you.
Do you have any follow-up questions, Stephen? Okay.
All answered. Thank you.
Thank you.
All right. It was nice to hear from BNA this month. We will see you again in April. And now for a conversation with Mike Treve. Mike, we didn't talk. He asked a few questions about the special question, but I think we can go into a little bit more detail. Also, what I'd like you to do is talk about a little bit about how the industrial production and capacity utilization release that happened today relates to our special question, if at all.
Right. The February industrial production index came out this morning and showed an increase in production for February and an upwardly revised number for January. So we're continuing to see over the last few months improvements in the growth of the manufacturing sector, at least. The overall industrial production index measures more than just manufacturing, but the manufacturing component of that index is what we compare with here. So we're seeing a parallel improvement over the last 3 months, at least, in month-to-month changes in industrial production. Your other question?
I was going to ask about
the special question.
Yeah, the details.
Right.
I mean, 75% of the firms who answered the special question said they expect increases in production.
Right.
In the second quarter. What I was trying to get at is, how does that relate, if at all, to the increase in prices and the increase in prices for their own goods? and employment.
Right. Yeah, we didn't ask in the special question about the price or employment element, but there are some consistencies with the general survey, I think. We asked in particular whether they expected increases in production in the second quarter compared to the first quarter, and whether the growth rate expected represented an acceleration or deceleration from the first quarter. And also we had them break down whether the increase or decrease reflected seasonal factors or underlying general business conditions, because we know in our particular sample there's a spring effect. Production tends to rise in the spring months compared to the rest of the year, and our series are actually seasonally adjusted, so it takes into account that spring effect. But as I mentioned in the answer in the press conference, 3/4 of the firms were expecting growth in the first quarter, and about 65-66% expecting that growth to be an acceleration from the first quarter. And over half of the firms indicated that this was due to changes in business conditions, and about 1/4 of the firms saying it was seasonal effects. So it's consistent with the general pattern of responses we received in the survey that indicated an improvement in expectations over the next 6 months, which is reflected in our normal month-to-month questions. So, the increased optimism and recent growth is filtering into, some employment increases and in this case, forecasts for second quarter growth compared to this quarter.
Well, I'll take that as good news. You've just been watching the Business Outlook Survey press conference call for March and a conversation with Mike Trebbing, Senior Economic Analyst in the Research Department of the Federal Reserve Bank of Philadelphia, and myself, Catherine Dibbling, Senior Media Representative in the Public Affairs Department, also with the bank. We will be talking to you again on Thursday, April 21st, 2011 at 10:05 a.m.